Good morning, traders. This is Perry Wilkie with StartupTrading.com. It is 8 minutes till 9 a.m. Eastern Time on Tuesday, September 16th. So, looking back at yesterday's action, um, right up to this large gamma at 592 in the Qs. Uh, so, from 588 to 592, a 4 point range, or basically 160 point range in the NASDAQ for the day. But not very two-sided, right? You had between 90 and 91, a 40 point consolidation that went on for hours, and then a little flash up to almost 592, and then back down again. And then looking at the cash market, right, just hugging up here still at this uh, 6600 level, and then we got above it, and then right up to 615, 620, and we were basically right in line with we hit the wall, which was the just a 1 day expected options move for the ES. You can see how the Nasdaq got over it, and then just that ended up being support, but really not doing much. The ES still hitting its head on the wall there. And then as we look, the title of my video is, the consumer is still strong, right? So, we were expecting, right around zero point 0.2 to zero point 0.4 on retail sales, and we got 0.6, 0.7 increase, and then expecting a negative print on import prices, and those are high. Well, no shit, the tariffs, and then but the consumer is still strong, and then so with them not wanting to roll over, we could, the Fed doesn't want to get in that position to where we're stagflation. I think at this point in time, they're more worried about the downside. Powell's hitting the end of his term regardless, and between now and next September, we'll get into that right now. They're expecting basically 1.25% drop between now and really next September. Uh, you're looking at going down. Right now we're between that 425 and 450. Um, so we're supposed to go down to basically 300 to 325 on the basis points, and then just go from there. But I think Powell's term ends around Valentine's Day. I don't know, next year, so he's not going to be around. So the rest of his regime is just going to be rate cut this meeting, rate cut next meeting, probably skip a meeting and then rate cut, skip a meeting, then rate cut, and he'll be out somewhere in here, I believe. And then we'll get someone new, but a lot's going to change between now and then. With we'll get a lot more information, obviously. So we are, still floating up here at these all-time highs. Uh, 66.70 is the point of control from yesterday. 66.45 is from Friday. And as we look at really now where we're, on that, pullback impulse move up, you couldn't go lower, so you went higher. Uh, and then really, I think for this week, the Bulls just need to keep it above on the December contract, 24,275, let's call it, and then 65.80 basically on the ES on the front month. Uh, so looking at where we're at, obviously we get some rechecks of some previous prices here. Uh, we still have signal prints, on any real weakness today or even going to the Fed. Uh, Watch for this 24,300 area to trade on the Nasdaq, and that's right around where that check back point is that the bulls really need to hold into the week if we're going to keep going up next week. I still think that there's probably a 60% chance that this week we put in a high uh, that lasts until December. So whether that turns into something that goes into multiple years, right, or not, but I still think it's a top that we're going to be putting in it until December. And I keep saying this, and I've been wrong before, and I'll be wrong again, but I think it's wise to start uh, on your core long-term holdings. Start, slowly raising cash. I'm not saying sell all your stuff and short the market by any means. I'm just saying, if you're 100% invested or 96% invested, you should probably start taking, 2 to 3% off uh, every week, and then just start building cash on any, you know, time you get a big push up, you should just take some off, I think. And then I wouldn't build it up more than a 25% position in the cash on your long-term holdings, but I think you're going to see better prices between now and the end of the year, and then you'll have to determine how much of it you put back to work. Uh, and then as we look at really where we're at, we're in value for the Dow, we're in value for the Russell, we're above yesterday's range for the Nasdaq and the ES. And then as we uh, look at where we're at, the call wall for today on the Qs is 594. That is our overnight resistance, right? So, um, and then the high expected move for the day in by Thinkorswim's calculation would be, fair game is anywhere between 588 basically and 595 quarter. And then you're looking at that would line up to uh, just right around this 24,700 area, give or take a few points. Looking at the cash market, right, we're still uh, have the call and the put walls have changed, right? So we've got a lot of gamma building below us now, which should mean that we're going to get a retest of that this week, the 6,500. Today or this Friday is a large options expiration on this quad wedge. It's well over $1 trillion just in the call positions that are in the money right now. So as we look at what we're at, I'm not expecting too much today, but keep in mind that today's range, remember yesterday's range for the NASDAQ was around 160 points. We should get probably close to 300 today, if not a little bit more in range as we get expansion heading into tomorrow. And remember, tomorrow we have the VIX expiration, and we could get anything going on into the FOMC and tomorrow. But tomorrow afternoon should be wild. You'll have to decide whether you want to risk your money in those 2 hours or not. Personally, I find it's easier to trade Thursday and Friday after the FOMC than it is to trade those 2 hours tomorrow. With a fresh VIX uh, going on, I expect to see 200-point swings uh, tomorrow, a few of them between 2 and 4 o'clock. I hope this helps. You guys have a great day. We'll see what Jack's looking at next.